Let's go. What is up, everybody? Welcome to the official Trade Talk channel, where I show you how I analyze price for the most consistent, higher probable entries to help you all become better traders. How's everybody doing on this fantastic Thursday morning? We're going to take a look at a few assets as always, and we're going to try to determine which direction this market is trying to go. It's been a little bit of a muted week, at least on the Bitcoin front. Meanwhile, the S&P 500 has pulled back pretty modestly, to say the least. We have taken out last week's low, so if it's going to continue to be bullish, it's at a place that I would expect that to happen. If it is going to turn around and we're going to be looking for new bear market lows, which is not the stance that I have, but if that is what the market wants to do, then we will be positioned for it. We will be ready no matter which way it wants to go. And thank you all for being here with me this morning as we look to do this. All right. A little bit of info. We did get a small, this is not a very important number. As you can see here, it's just a medium. It's just medium on the risk factor. The numbers, they were last month you had 226K. We were forecasted for 230. We got 230. So pretty much a non-event there. There's not much event risk on the week or on the docket for the entire week. Not a whole lot of stuff. No major market moving things anyways. Next week, however, we got CPI, and then the very next day we will have FOMC. We will stream both of those events if the internet gods will allow it. All right. Thank you all so much once again for being here. And we got roughly about 13 minutes until we get started here. So let's go ahead and say a few hellos real quick. Good morning. Good morning. Hellos. Good morning. All right. Perfect. Beautiful. Let's go through this. All right. Let's start with the S&P 500 and then we'll work our way over to the Bitcoin. All right. Let's get up. There we go. Got that. Beautiful. All right, so we are day traders here at the Trade Talk community. We do look for intraday opportunities as well as intra-week and intra-month and intra-year. We basically try to position ourselves good for like the broader market moves, if you will, the big major moves like massive trend changes or whatnot. But we also look to do that on a very small scale as well. And a lot of times, looking at the bigger picture will help you to basically understand what's going on. So I'm still bullish on this asset, and I will be as long as we are closing weekly candles above this moving average right here. So you can see when we had the breakout right there on, we'll call it the Monday the 7th weekly range. That was a nice bullish expansion. You broke out above resistance. You took out this moving average. For the last 4 weeks, you have tested this moving average as support. So it does indeed look like it is trying to break back down, or it does look like there's not much demand up above 30. Not what is that? 39.63. Let me change this scale because if I can't see it, you guys surely can't see it. I don't know how to do that. Man, I forgot how to. There we go. Text. Yeah, there we go. Boom. Awesome. Apply to. Well, I don't want to apply to all because I'll just change it on all because then it'll make all the candles the same color and everything. And all right, so anyways, here we are. You can see here that you got weekly support around 39.63. We are currently trading under weekly support, and I don't want to see weekly support break. Now, during the week, it is okay to have intra-week volatility go, much lower than you expect it to. It's the close that's important. Like, how does this thing close? As long as it closes above that yellow moving average, will be fine. Next week, we got a ton of volatility on the docket. So if it is going to continue this near-term uptrend, then I would think that it would probably do so next week, because, price loves to use massive liquidity generating events, which is, high event news risk, to basically make the expansions. And we are always looking to be on the right side of that expansion, so that way we can make money. So yeah, as of right now, nothing has changed. You are still structured okay for the uptrend. I mean, if you don't know, this is an uptrend, right? It's as simple as that. You are moving up. Longer term, yes, I understand you're in a downtrend and a bear market, but everything changed once you did this, right? The last couple times that you have done that, you made what's known in the business as a bull trap. You get people above this, you get people really bullish, and then you break down, and then, panic ensues. You've done that twice already in this bear market. So 3 times this is the charm, I guess, is the old saying. Well, we'll see. If we break down, we take out the trend, we take out that, then in a week or two, we will be looking for a bullish retrace for us to get short. So we won't nail the absolute top of a bigger down move, but we will get positioned for it. Hopefully it happens either on Tuesday or Wednesday, whatever week it is. But that's basically our broader scope, or the broader analysis, if you will. Let's get rid of this as you see where you currently are. Get rid of that. And boom, there you go. So there is your last week's low. You also took out this week's low. So the only low left, or downside target, if you were looking to short the SPY or the S&P 500, would be 3906. But I think, you do that? Absolutely. Will you be on the right side of the market? I have no clue, right? I don't know which direction price is ever going to go. But if you did want to position yourself for that, then I would say that you're probably looking for short trades somewhere around 39.63. Are we? No, we're not. You can see how this thing came in and beautifully tested that level to perfection today. This also gets you above yesterday's swing high. So if you are going to roll over, you need to do it now, right? There's no point on going any higher for a liquidation break, for the market to generate enough liquidity to move down. It has done all it needs to do. It has done it. It did it last hour. So if you are going to see a breakdown, I would want to see that breakdown come pretty soon. Now, there are a few important key takeaways here. Bear with me. Uno momento, por favor. All right, so here we go. Damn it. We can get a hold of it here. There we go. All right, here we go. Okay, so down here, bottom right-hand corner, we're going to maximize this so that way you can see it. You can see that this green and red line is your options weekly expected move. The options market prices in move that it thinks it's going to do. And this week it said, it said something along the lines of it's probably going to do a $6 move, either higher or lower from Friday's open. We have gotten that move. We did break down here. On this day, we did take a bullish position, and we were looking for the range to expand up, similar to what it did here. But as you can see, you have broken down. So if it's going to be bearish, which yesterday it looked like it was going to continue to be bearish. This was like, if you look at this as an expansion, this is your correction, then the next day you should go down further, right? At least have a move similar in size to this move here, but here, and go down. So if that happens, then that's the short trade that you are looking for, right? That would have been here. This would have been your entry for that move if you think that move is happening. All right. What I think more than likely will occur is that price is going to get back above this, because this could have just been, like I said, a liquidation event. You've liquidated all the people that got long here. Now, obviously, price will tell us which way it's going to go eventually. So we are trying to position ourselves for that move. So I have another chart I need you to see right here. Oh, okay. I could just do it like that. All right. So I can get rid of all that. Right here. This, if anybody isn't aware, is the VIX. This is the measurement of volatility for the S&P 500. So basically, whenever you get big down moves in the S&P 500, this thing will get a bounce or a pop or a spike to the upside. The VIX has been trading lower, and there has not been a blow off top on the VIX yet. And that is why so many investors and so many traders are still so very bearish on the overall marketplace because of this asset. All right. One thing that this asset has done here is, let's go back over here. We have bounced. We took out August's low right there. All right. That is the low of August. And you can see here, if I stretch this out, this wick right there liquidated that low. So you're getting a bounce. And that's typical because that's the way price works, right? It does it over and over and over again. Once it liquidates a massive amount of volume, then typically you will get a retracement, or in some other words, also known as a correction. So your near-term trend down, you hit a massive liquidity pool and you bounce. So had you been looking to buy VIX calls because you think the market, overall market, risk market's going to be bearish right here, at that price, $19.12, you should have entered into a long position, or you should have bought $19 strike calls. Okay. Had you done that, you're up $3.70 on the trade. Not a bad trade at all. You might want to go ahead and start seriously thinking about profit, because look how extended you are from the overall option market's weekly expected move. Now, in times of heightened volatility, typically when the VIX is going up, it's not uncommon to see price, break out or break down from these weekly expected moves. And then the market is open, but that's okay. We still have a little bit of time. But as you can see, this right here is extended extremely far from where Friday closed. This is Friday's close there. You're trading very far away from that. So I expect a return to the mean at least probably down back to 2050. So the way we could trade that is either A, we could buy VIX puts, which, doesn't make much sense because this asset doesn't move that much. I mean, it doesn't move as much as something like the S&P 500 moves. But, if it is during a bear market with a lot of volatility, then yeah, it does. You can see that this week, which Friday is here, December 14th, you can see, no, tomorrow's the 9th. So where is the 9th? I guess we can't buy the 9th. Anyways, so they have just a $2 move priced for 5 days from today. Just $2. Now that's like the expected move there. Getting a nice big solid bounce here on the open. So let's pull this down. Let's go over here and check this out. So intraday, it looks like maybe wait to get short right about now, after you take this out right here. So if there's a short trade you're looking to buy $23 puts, I would say, you're just looking for it to go out a little ways. You could pick up $23 puts for $1.71 right now. Not bad, right? $1.71. That's $171. You can buy those potentially as long as the liquidation occurs that you've gotten so far. So we could either take this trade or buy calls on the SPY. Now, it does not mean that we're going to be right. It never does mean that we're going to be right. But I would look for a return to the mean, a mean reversion trade. Look for the price to snap back to reality. And let's go ahead and put on that. Let's just go ahead and put on that trade and see what happens. Now, longer term, I'll just buy one of them just, that way. All right, and I am filled on that position. All right, so naturally, like I said, I never know what's going to happen, but that's what I would be looking for. Once you do the liquidation here, you've gotten over everything. So anybody that's gotten short the VIX from this move up, they would likely be stopped out by now. So now if the market's going to go lower, then it would slowly meander back down to the average or to the mean, because remember, this thing is completely extended up off the lows. But you can see an outsized move like this sometimes, simply because a lot of people are getting stopped out. All right, that's simply because a lot of people are getting stopped out. Now, if you think the bear market is not over, then you will be looking to buy calls on this. But what I want you to do is I want you to stop doing stuff the wrong way. I want you to start doing stuff more along the right way. What you need to see before you can buy calls is a retracement, right? You need to see that retracement come back in, find support somewhere, and then you can get the expansion in the direction that you would want to see. So it would look something like this here, right? That's ultimately what you would be looking for if indeed you think that this asset is going to go higher and that the risk markets are going to break down. All right. You can see right here on the DXY, which is the dollar index. Here is the open of the day. Shoot, where is the open of the day? Here is the open of the day. All right, there you go. So this is your opening daily candle, or not daily candle. This is the opening of the hourly candle, but this is your open of the day. And on the daily range, you have set in a high, right? Then you traded down, set in your low of day. And then during the London session, what happened? Expansion up. What did it do? Took out this high with this push here. Boom. And then down, made a new low. So inside of today's range on the dollar, you have liquidated the low and high of day multiple times. And currently you're trading down on the lows of the day. All right. The lows of the day. So Bitcoin, what are we looking for here? Well, originally coming into this morning, let me get the S&P 500 back over here, as I'm going to keep the VIX on open, that position on my other monitor. If it starts to get out of hand, because we keep getting this expansion to the upside, because I'm completely wrong on looking for a retracement today, you ultimately will get a pullback into support. Whether or not that happens today or not is anybody's guess, right? It's anybody's guess. That's why I love trading options. It gives you the freedom to not have to sweat the position, as you've got your risk already underlined by the premium purchased for the actual put. So that means if I'm wrong or it expires worthless, then I'll just lose the money that I purchased the premium with. But I am looking for this to pull back today. Doesn't look like it wants to. Yesterday's high is there, and your midpoint roughly today is right in the middle of today's range. So it could continue higher. This could be like a near-term short squeeze, if you will. But we'll see, right? The market is just now getting open. That we got plenty of time to wait. No, we want the S&P 500 over here. All right, so again, S&P 500 looks bad, but are you going to short it down here? I mean, you could, technically, as long as you catch the high of day. We go intraday here and see what just transpired. There's that move I was talking about. So if you was looking for the short, your entry would have been there, only there. Right, only there. That is that weekly support. There's weekly support. That's where you've broken down from weekly support. Next, what we're waiting for before we get bearish on this asset will be for it to break and close below the 21 exponential moving average. Then we have to be patient again and wait for the retracement back up to this level. And then that's where we'll probably be looking to enter short positions, looking for another expansion lower. So no matter what happens, here, we will be able to nail that position. We can't nail every trade. But you are getting that push lower after liquidating yesterday's high. So that's typically the reaction I want to see once the liquidation break trade works, once it plays out. So basically what I told people in the Bitcoin chat today, inside of the public, or the not public, sorry, the very private Discord group, is we were probably going to wait for Bitcoin to make a fresh daily high, and we were going to look for shorts today and today only. I know that's counterintuitive of the trade I just took on the VIX, but we shall see. Here on the 1 hour, let's make Bitcoin really, really big so you can see point of control from yesterday, and then this is your point of control today. Price is above it. So technically, the position I took on the VIX, I would be looking for a buy, and I'd be looking to buy it right here at 16,829. That's if I had a bullish bias on the day. A bullish bias. I look to buy intraday supports. So you are at an intraday support. This is also the point of control. And in the open, however, the daily open for today is here. So not really a whole lot going on. You did make a low of day all the way down here, so you did liquidate all of these wicks, but you did not liquidate yesterday's low. Yesterday's low is all the way down here. So that's going to be your longer term target if you're bearish. I am not, however. All right. So I already am holding long positions on Bitcoin, but if you want to get in a long position right now, it would be difficult to manage your risk because of that wick there. And then this right here would be your profit target. So just purely on a risk to reward basis, there is really no trade to take on Bitcoin, right? Now, there is a longer term operating range here. That's where those lines were, there and here. I guess one could argue that you could put it down there, but you can clearly see that beyond these two lines, there are no candle bodies. So this is your operating range. This would be the better place to get long than here. And your risk to reward would be much better. My problem with that is that would be the bearish target. So here is your high of day. Your high of day was made during the open. Here's your open. You set in the high of day. That high is still intact. That is your high of day. So you could aim for that. That could potentially give you a little bit bigger of a risk to reward, but you would want to at least, at the very least, get your risk under this wick. So your trade set up to the long side would look like this. You would have your stop loss there at 16,801. Entry would be 16,829. Profit target would be 16,885. That gives you a beautiful 2-to-1 risk to reward. And your time of taking this trade will end shortly. If it is going to go up, we would want to see that expansion start to happen pretty soon. So yeah, looking at this, that doesn't look very good. It looks to me like the S&P 500 wants to see another lower push today. So I'm going to leave it up to you to decide on what you want to do. If you want to short it because you have a bearish bias, then either you will get a push back up here and the people that got long will make money. Also, people that get short up there might make money also by the liquidation. If you liquidate that, I would want to see an instantaneous bearish reaction. Sorry, I had trouble with getting the two-factor authorization or authentication again today on my platform. They send me the email, just not the text, or vice versa. They send me the text and not the email. I have my laptop with me right here on the other side of the desk. That's what I'm going to use to take positions. What I'm watching is I'm going to watch this right here. I think, there is an argument to be made that even though we have this, what looks clearly like a bearish reaction on the SPY, you're still into support. Intraday support is here. So I can't say that this is a breakdown until you get an hourly close under 39.38. All right, as that's the lowest close in this sequence of price. So that would be where I would essentially want to watch to see what does price do here, right? So because the dollar could go all the way back up to there at 105.201, as that would be the area where I would expect shorts to come back. shorts to come back because the dollar is clearly what? Order flow is clearly bearish. So I know people want to get long the dollar, but they shouldn't be. They should be bearish the dollar like we are. Like we've been bearish since right there on that wick. Right there is when we executed our short trade. And as you can see, that trade has been working flawlessly. Haven't had to do anything. So I don't ever expect a trend to reverse. But if it does, then yeah, good for us, right? It has reversed the dollar. You have had a blow off on the dollar, meaning if you look at this thing on any time frame bigger than a daily, you can clearly see that this is that's pretty much a blow off top. You got one monthly candle here that took out all of that bullish price action. So yeah, big move, big expansion lower. And if you look at the entirety of the bull market that the dollar has been in since, May of 2021, look at the size of the monthly pullback candles. You got one here, you got one here, you got one there, and then the biggest one is there. Look at all those. Those are all your monthly pullbacks for long positions on the dollar. All right. I might have missed my entry on Bitcoin, and I can't chase price. I'm already in a long position, but I wanted to get long because I shorted the VIX. You guys saw me short the VIX, so that means I have a bullish bias. All right, and then look at the size of this beast right here, man. In comparison to all of your pullbacks. Pullback, 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 pullback on a clearly bullish thing there. So, yeah, that's a blow off. I'm sorry. Now I'm just being facetious a little bit. That's a blow off top, dude. All right. I don't give a shit how you cut it. That's a blow off, my man. And we shorted the top. So we do it like that over here. We are gangbanger or busters on the chart analysis. Tuesday we did lose a trade, which I haven't closed that position out yet. I'm still holding those 400 strike calls that I bought on the SPY. But since seeing how the SPY is trading at let's see here, 394. Yeah, I'm about $6 low. Right here is where it needs to get back to in order for me to be back to break even. All right, on that trade. But remember, I was risking the entire premium. So either the expiration can happen and those options can expire worthless, and I'm okay with that. That equals out to be 1% of my total account's equity. Or I can give the trade time to work out, right? Give it time. We bought it at a pretty decent spot. We bought it a little bit higher than I wanted to originally. We should have waited on weekly support to buy it, but we didn't. We bought it. We front ran weekly support a little bit, I guess you could say. And right here was the level that we were watching. Basically the bottom of the options expiration, the options expected move. I keep getting those words confused with one another. So if you do have a short bias on Bitcoin, guys, and you do want to short it, if it does make a high of day, I don't know that it will make a new high of day. I don't know that it will give you a short position. This is what I do know on Bitcoin. We broke down below support yesterday. Boom, right there. Right there. And it has been having difficulty getting back above support. So your high of day is a support test. It's already happened. It happened at the open, right there. That was the short entry. But you can clearly see that once that happened, it hasn't been able to break down. Also, in fact, if you look at the 4 hour, there was obvious resistance. There was a break above resistance. Here is 4-hour support right here. You were trading under 4-hour support 1, 2, 3, 4 times, and you could not close under it. So shorting a fresh daily high is going to be a very risky trade, especially since this candle right here, look at it. That's the break above resistance after getting a very deep test of support. So had you taken the short trade today here on the open of the day, this is the open of the day right here. If you did not take money or take profits on this push lower into this lower support, you are probably going to be stopped out. Always take profits. Always, 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 always. Do not allow your brain to tell you to hold it because it might go further. Don't do it. That's your brain playing tricks on you. That's that's the little greedy nature inside of your skull. Don't fall victim to that guy. He will get you in trouble. All right, so yeah, that's what we're gonna do here. We got the $23 puts. That's the trade we took, probably because it's just what we were on when we had the open. If we go back over to the VIX real quick, I'll show you what that looks like currently. So on this spike here, getting above the previous day's high, remember I said if it is going to go lower, I would expect it to do so once liquidating the previous day's high, because that's how the market moves. That's what the market does. That's why I'm so sick. That's why I could come in here and do this day in and day out, and have such a magnificent high hit rate, right? Now, this trade isn't really paying me anything yet because I bought the $23 strike puts. So right there where that white line is my entry, if you will, my short entry. And I was filled on that position. I can show you, and this is a real money account. I did take a biggest majority of the money off just in case someone wants to hack my stuff, but so there's very little money on this account right now. You can see there that's a filled position. That means I bought this put right there, the 23 strike put, expiration 21st of December 2022. So that just means that this trade has 12 days to work out. Now, time decay will significantly destroy the value, the premium that I purchased it with. So that's why I like to go out a couple weeks for my day trades. So that way, if I have to set in it for a couple days, 3 or 4 days, while I'm not in the money, because if you're in the money, you won't lose a whole lot. You'll just have intrinsic value, right? Because you're in the money. But if you're out of the money, the longer the trade goes on and you're out of the money, the more the value of the premium will decrease, because that's how this works. That's how options work. 90% of all the options available on all the assets out there expire worthless. 90% expire worthless. So if you're going to be a premium buyer, you got to understand that you can be right on the direction of the trade and still lose money. Right? And another thing also, the VIX going down is going to also hurt not only the time decay, which the time decay is something called theta. Vega is volatility. So naturally, if the VIX is going down, then that Vega or that volatility aspect of the option premium pricing model will also cause the premium to decay. Just the fact that it's going lower. All right. So long position on Bitcoin was right here. Let's just do this. That's the position that I was trying to take that I missed because I was running my mouth. And your target is a high of day, but remember, you're not looking for a complete and total high of day check. You always want to take, oh man, excuse me. You always want to take profits before the high of the day because there's nothing that says it has to get there, right? And that would suck if you had your take profit limit order setting at 16,888 and price gets to 16,887 and rolls back over and then ends up trading at 18 or 16,789 by the end of the day. Not only did your trade work and you were in profit, but now you ate a stop without getting out. And that's the whole purpose of taking profits. That's the purpose of it, is to eliminate that aspect of the marketplace. I had so many trades when I was first starting out, man, that would be in profit and I'd be like rocking and rolling, so happy and everything because I felt like I was finally starting to get it. And then I'd watch those trades turn right back against me, like just a few, like so close to my exit and then roll over, right? Typically, I want you to take profits at resistance. So there would have been your highest area. But like I said, that's such a narrow trade that, like, it's not even $100. Well, yeah, no, it's not. So yeah, it's a very tight range. In order to make money in a marketplace like this, you have to use leverage and a lot of it. But you can use leverage and you can take these trades like that and, add a quick 10, 15% to the overall account's funds. And that's the goal as a trader, is to get in the market, to make money, and then get out of the market, and then do the same thing the next day, right? And do that over and over and over and over and over consistently. Your P&L will move up because of compounding interest. It's like the best thing in the world for investors. It's how investors can go from literally nobody working as a milkman and then ending up retiring with a fat portfolio because of compounding interest. Which is why you hear the cliche over time, right? Most people forget about that aspect of trading. You want to be consistently profitable over time so you can make money. Good morning, everybody. Greetings from Amsterdam. You are the best, Heath. Appreciating all you do for us. Learning a lot from you. Thank you, Jerry. And greetings. There you go. Fresh hive day on Bitcoin. So if you were looking to take that short trade, right in here's where you would be looking to take it. You that got long, you are taking profits, moving your stop to break even. So once again, a successful position. I did tell you Monday or Tuesday, since we had that position that worked against us, that we would make it back today, didn't I? Hopefully, it's my exact words. Hopefully, we get on the right side of the market. We were today. I just missed the entry on the Bitcoin trade, but I did get the entry on the VIX position. So now you've closed above the high of day on an hourly closing basis. Would you short this? Would I short this? No. Nope. I would have had seen just a slight peekaboo above the high of day, and then I would want to see a bearish reaction. Once again, I will show you what that looks like here. That is what that looks like. Get above it and then have a pretty quick bearish reaction. Okay? That's the key aspect to the liquidation break. You get above it, you liquidate it, then you go away from it quickly. Because in a trending environment, if you're trying to short an asset that is clearly trending up, you're going to find yourself getting ran over a lot because price isn't just liquidating the high of day. You are literally seeing something called trend continuation. So that's where a lot of new traders will get mixed up because they will try to inflict their will on the marketplace. They will be like, this is a short. I know it's a short, so I'm going to take another position because I just got stopped out. So they wait for another high of day and then they short it. And guess what? An hour later, maybe two, they're getting stopped out again. And how many times you do that is, that each time you do that, you're paying fees. Your overall equity is just getting absolutely decimated. The goal is to put the risk in the market once to see if you're right or wrong. If you're wrong, you stop, you're done. You wait for the next day. Then you try to take another swing at it, right? So that's just, you will learn all this stuff over time. And if you're listening to my voice and you're new to this channel or whatever, not many people in here today, but that's okay. But if you are new, make sure you hit that subscribe button. I'm telling you, you're not going to find anything like me out there. You're not going to find somebody on YouTube that will come out here and place trades consistently over and over and over and over again and tell you step by step the process and why, right? Make sure you subscribe. Do we have losing trades? Yeah, we do. We lost a trade on Tuesday. So it does happen. It just doesn't happen as often as we hit the winners. We hit the winners a lot more times than we hit the losers. And proper risk management is the key to financial freedom. To financial freedom. Current long list and percentages. Current long list and percentages. I'm not sure. Oh, got you. So I don't know. Does that mean that's the percent you're in profit? Because you got TLT 20% TLT, 10% XLV, 10% XLK, 10% IYT, 10% MPW, 10% URA, 10% EWY, 5% WPM. I don't understand. Is that your entire portfolio is tied up in all those things and those are the percentages? Yeah, I do believe that the bear market is pretty much over. I do, but I mean, only time will tell. The reason that I said that we're going to look for a pullback on the VIX to potentially buy calls is it's just going to be a protection trade, right? A protection trade. Because I think ultimately, I hope, or we'll see, right, that the S&P 500 does indeed bounce where it currently is, and that it will get above $400, right? We'll see if it does or not. So what I want to see is I want to see that low is in today. And also the weekly low is in for the week. Now this asset closes tomorrow, and it's not very often that we see the weekly low be put in this late into the week. But I mean, it is if it's a down week, right? Then that means the top of the week was in by Tuesday, not the low. And on Tuesday, we should have been looking for shorts, not longs. But we would have been taking profits because our overall bias is bullish on this asset, right? You are back above weekly support. So that's a good sign. Can it stay up there? Well, time will tell. Time will tell. Meow, MFer. Thank you, Mr. Pepe. Pepe the cat. Pepe is my cat. Good morning, FD. How are you, my friend? Current long list and percentages. Read that. What do you think about Aussie Swiss? Let's go take a look at it. Oh, yeah, we trade all markets here as well. All markets. We trade Bitcoin. We trade Forex. We trade stocks. We trade options. What I don't trade is futures. I don't have, futures on the indices. All right. If I'm going to trade the indices, the S&P 500, the Dow Jones Industrial Index, or the NASDAQ, I do that via SPY, QQQ. I do that way. That's the way that I trade those things. Oil, we trade oil, but we do it with options. I don't have a futures account. It's not that I couldn't trade futures, because that's what I'm trading on Bitcoin. Is I'm using Bitcoin futures to trade Bitcoin. And most cryptos, most of the time, if you're trading it, well, I can't say that. That's not true, because a lot of exchanges nowadays have spot, margin, and futures accounts. But Bitcoin is moving up. Let's get it up there. Nice. There it is. There's your profit target. There's the trade, 2-to-1 risk to reward. Hit it fantastically. Fantastic. Boom, shakalaka. He's on fire. Yeah, let's look at Aussie Swiss. And I'll just leave these up so you can kind of see what's going on. We don't need the Euro USD up there, because typically if risk is going to go up, the Euro USD will go up also. We'll pull the VIX up here so that way you can monitor my trade as well. The VIX short. All right, so moving on, Aussie Swiss has liquidated the swing lows. So anytime you get a liquidation, usually, that's the strategy, right? That's how the strategy works. Either A, we are taking a position, like say a short entry, for instance, here at 0.63890, and our target would be the liquidation run. So we would be getting short here, aiming for this to happen. And then you get that. Boom, right there. See that? That's your liquidation run. Or the liquidation break portion, I guess, if you will. That's the one that I typically don't want you guys to do unless it's a high event risk news day, because a lot of times you're going to be trying, until you get your bearings about you, until you kind of understand how all this really works, you're going to find yourself getting stopped out a lot trying to do the liquidation break trades all the time, because continuation gets in the way of that, right? And it's difficult to be on the right side of the market. It's difficult to pick the correct direction on a daily basis. So by doing this strategy the way that I'm teaching you, you can still get in, make money, even if you're on the wrong side of the trade, because that's happened to me quite often, where I'll have a profit target, a stop loss, and my entry. I'll get in, it'll hit my profit target take me out. I move my stop to break even, and an hour later, price comes down or goes up and stops me out, and then goes in the right direction. So it's a fantastic strategy to literally be able to be on the wrong side of the market for that day and still make money. I mean, you're not going to find anything better, and you're definitely not going to find it for free. And just because people are charging you money for stuff, that doesn't mean it's going to be better. It just means you're going to have to pay for it. Doesn't mean it's going to be a better strategy. This strategy has a very high hit rate once you understand all the concepts and principles. But anyways, you have liquidated 1, 2, 3, 4, 5 weeks, 6 weeks worth of price action. All right. So it's only normal that you would get a bounce after doing that. And also, you took out a monthly low as well, last month's low. So you got a support down there and all that. Now, would I say I want to get long down there at support just because it's support? No. The trade on this is to wait for resistance to short it, not the other way around, because the trend is what? It's down, right? It's down. So trying to get long automatically means that you're more than likely going to be fighting just the trend. That's a longer term trend, a monthly trend. Like if you look at the S&P 500 on a monthly basis, you're going to say the same thing. Well, why ain't you looking to short swing highs? Well, typically we are. Typically we are looking to short swing highs, but you've got a trend change right now occurring on the S&P 500. Or I should say a potential trend change. You do not have a potential trend change occurring on the Aussie Swiss. That is the difference. If you use a 21 exponential moving average on the higher time frame assets, or on the higher time frame charts, on all the assets that you like to trade, it will kind of help you get an idea as to which direction the overall trend is going. So like up here, people were looking for longs. That's why you have such a massive candle breaking down, because all the people that got long here got smoked, right? And then that ended up acting as resistance moving forward. But if you look at how it works, like, just look at it. You break down. And remember, I said if your breakdown candle puts wherever that entry point or that old support as the midpoint of the breakdown, then it's typically a legit breakdown. But then you can look how on this month you traded up to roughly around the midpoint, a little lower, and reversed, but closed bullish nonetheless. So people got long here on a test of support. You can see it, how it played out. They got long on a test of support. And then as soon as you did what? As soon as you took out your previous month's high, what did you do? You reversed. So now it's the marketplace is going to turn around and look for new areas to liquidate. It's liquidated as high as it needs to go. It doesn't need to go any higher. There is nothing else for it to liquidate all the way up to 0.70411. So boom, down. That was the trade right there. The expansion lower. So you just did the same thing here. You just liquidated this low here. So now moving forward, I would wait to see how this month closes out. Does it close out bullish or does it close out bearish? If it closes out bearish, then you can watch resistance for potential near-term bearish trades. Yeah, I mean, it's bearish. You're bearish on the daily even. You're under the 21. You're under the 50 on the RSI. You're just now coming into the 50 on the RSI, which is the midpoint. That's the midpoint. The 50 is just a midpoint. It's not an actual Fibonacci. It's not nothing. It's just simply the midpoint. And the midpoint, you will see, the more you start to trade and the longer you start to do this, you'll start to notice that that midpoint comes into play quite frequently. It is. There's 4 main data points that you should pay attention to: your open, high, low, and close. There is a 5th one, and that's the midpoint. You should pay attention to it as well. So right now you're bullish on the day, but I would wait for the short setup to set up. You don't have a trade to take today. There is not a setup to take today. We do not short or long off of moving averages. We do not. Because if you do that, you're going to get beat up. Anybody that tried to get long on this test, they got smoked. Anybody that tried to get short on this test, they got smoked. See that? That's why we don't take trades based off of that. We take trades based of objective price levels. So you got to wait for an objective price level to come into play before you can even look for shorts. I don't know that you get all the way back up here, but that was resistance until the trap here. And then you knew it was a trap here, right? So you revert back to the old resistance. If price gets up there, then you can look for potential rollover. But there's no trade to take on it today. Not today. Maybe in another day or so, but not today. Get out and look for another entry. Yeah, I don't suggest you do that the same day. Remember, making money in the market is very easy. Keeping it is the hard thing. That's where most newer traders run into trouble. They can't keep the money they make. They make money and then they end up giving it back. And then not only do they give back all the profits they made the previous day, they're also giving back half of their account. And then they just get in this never-ending circle of death, destruction to their portfolio, not to themselves, but you get what I mean. Hopefully you know that I'm just joking when I say stuff like that. Good morning. Good afternoon from a chilly UK. Yeah, it was 60-something degrees last night here, so that's typically chilly for this state. It's probably about 75 out there right now. Every time I hear the 90% stats of options expiring worthless, doesn't make much sense. For every call option out of the money, there is a put option in the money. Yeah, but that's just a small. Yeah, it's just a small amount, right? A small amount of options that actually expire in the money. Not the bigger majority of the options do not. Yeah, you can say that. Technically, you're right. I understand what you're saying. Yeah. You can look it up. I mean, if you're good at math or whatever, you can figure out that stat. You can do it yourself. You don't have to take anybody's words for it. I strongly suggest you never take anybody's word for nothing, especially on the internet. Especially on the internet. There's so many scammers out there and stuff, man. I haven't actually done the legwork to see if 90% of the options expire worthless. I know in my lifetime, I'd say probably 95% of the options I've bought expired worthless. I blew many accounts doing the YOLO option plays and just watched them expire worthless. It's the option you buy, not the other way around, right? You can't say that If you bought, like, say my trade today, I bought $23 puts. Well, if this thing gets above $23 and continues higher and gets up to $26 or never comes back to $23, guess what? That option, it doesn't freaking matter if it's in profit on the call side. On the put side, it expires worthless. All the options on the call side mean nothing if you bought a put. It doesn't matter. You see what I'm saying? That option will expire worthless if you are out of the money. On expiration, if you are out of the money, it will expire worthless. And that's why selling options is such a very big strategy and so overwhelmingly utilized. More options traders sell premium than purchase premium. If they are purchasing premium, it's for protection to the downside risk, right? There's very few successful traders that do long option only strategies. Very few, because 90% of options expire worthless. Remember, the whole deal, the whole thing that you're trying to do is you're trying to generate a consistent stream of revenue by trading. So don't think too much into it. Just figure out a strategy that works and do that until it stops working. Then you gotta tweak something and figure something else out and get it back to working again. You're welcome, Precious Metal Exchange. Thank you for being here. Thanks for subbing. Perhaps someone checked volumes over a certain period of time or used options mostly to hedge rather than as an investment strategy. Correct. And that's another thing, right? If you're long the S&P 500 from $368, a lot of time what you can do when you get to like a market top or where you think a market top might be, you can buy, say a certain number of puts just to kind of hedge off that downside exposure. It's not so you're not really making money, you're hedging against the exposure of the risk of the loss. So, like, for instance, what I do with Bitcoin, most of your Twitter people and YouTube people, they're long spot, right? Spot Bitcoin. They're long spot Bitcoin. So, naturally, depending on where they bought, will determine if they're even profitable in that position or not. A lot of your bigger guys that have a massive following, they've been in Bitcoin for a long time, so they are likely in good profits. But yeah, but what I'm doing, like people that bought at 55 grand, for instance, they're out, they're broke, they've lost half their money, right? Half their money's gone. However, if you would have been trading futures while price was going down, that's essentially hedging off that long only exposure. It's kind of like a hedge. It is a hedge. It's not kind of like a hedge. It is a hedge. So like I get short on the futures side of the exchange, right? I'm short Bitcoin with Bitcoin, and then I get paid in Bitcoin. So it's just I'm hedging off that downside exposure. Whereas most people lost money during this bear market, I have tripled, quadrupled, and even quintupled my portfolio as far as how much Bitcoin I own. And it's not because I'm buying it with my hard-earned money. It's because I'm making money, making that extra Bitcoin through trading profits. So Yeah, I'm just yeah, making money. You do not have to be long only. There's no way to be just long only. You're going to make so much more money in the long term by hedging off that exposure. Uh, Ray Dalio, all your big hedge fund guys, they do it. There's no way they're just sitting in long only positions, man. It's impossible. You don't know what's going to happen. World War III were to break out tomorrow, the market would get absolutely cream pied. You need protection. You can do that by buying puts. That's why you can't look at time and sales to make trades, because you have no clue what the person that's doing all that buying and selling is actually doing. You don't know how they're positioned. You don't know if they are long or if they are short or what. You got some people that believe Bitcoin is only going to zero, that it is completely worthless, and it is going to be completely worthless. So they have a massive short trade on Bitcoin at $69,000 because they think eventually it's going to be useless. But the $20,000 people that thought that too, if they held on to that short trade, they had to buy futures contracts to hedge off that downside exposure, to hedge off that risk, that loss. But yeah, it's if you buy one or the other, right? Now, if you buy the exact same strike, then only one of your options are going to expire worthless. The other one will not, right? But that pretty much eliminates any profits you're going to make, because you put a floor or a top on it by doing that. So yeah, I mean, there's thousands upon thousands of strategies out there, of financial instruments to use to do. I mean, it's literally could take years and years and years to learn everything out there. First, just learn how to analyze price, so that way you're not one of the guys that are constantly on the wrong side of the market, because that's never fun. And there's a lot of them on Twitter, and I don't understand how they got such massive followings, because they have been wrong their entire life. All their calls are usually the exact opposite of what the market does, and their following just grows and grows and grows. It's like people are like, yeah, of course this guy's wrong with everything he says, I'm gonna follow him. What the? I'm living in the clown world, man. It's a clown world. Yo, 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 what is up? What's up, Aaron? Thank you for being here, my friend. Yes, says Brian. So I guess that's how he has positioned his portfolio. Can you find long entries on all of those? Come on, man. Just trying to work a man to death. You put up like 37 tickers over there. Let me answer some of these questions and then I'll go back and do it. And no, I will find you levels. I can't find you long entries. You have to find that. That's your job. This is my current long portfolio and percentages of shares. Gotcha. How about Swiss yen? Swiss yen, we were short. We had a short bias on the Swiss yen, but it has broken down already. Right there. That's what we were doing on it. We were looking for the breakdown at resistance. Right there. You can see how it just traded up into resistance and rejected. So that was the short entry. Yeah. Wait for it to find resistance. You have resistance here. You've already tested it as resistance. You also have a potential resistance there. But this resistance is roughly around the midpoint, so maybe it breaks out today. If it does, watch this one. Wait for it to find resistance to build in. Sometimes it can take multiple days before the trade setup even happens. All right. But you're also, there's your 21 there. You're under the 50. It's still a short trade. We just got to wait for it to find and or build in resistance. Once we get that objective resistance built in, then and only then we can attack it with a short position. But yeah, it's still on the watch list for shorts. I just can't give you an entry now because there isn't one to take. But if you don't, let me see here. Who asked that? Eric. You can follow me on Twitter at trade_talk_. There's a in the description. You can find me that way easier. In the description, I occasionally will post trade setups over there on Twitter. But not all the time, right? Because most of my followers follow me for Bitcoin stuff. I do have a few that follow me for Forex and other stuff, but the majority of my followers are Bitcoin only. But I will, when the Swiss yen trade is ready, I will post it. I will post it. Here it is, trade_talk_. Make sure you follow the right one because there are multiple accounts out there pretending to be me. Right? And I just, the followers just steady goes down. Right now it's at 4473. I was at 4504 last week. I don't know. I've been stuck at this number for a year. I don't know what's going on. But follow me here, right? At trade_talk_. Make sure you got 4473 on the follower account. If you find another trade talk that has all this same stuff, but their followers like less, like 2,000, 1,000, those are not me. Report those people. But I do occasionally post trade ideas, entries, all that stuff. And here's a U.S. oil. Me and Brian was short oil. He's still short oil. I stopped because it hit my profit target of the yearly open. There's an Aussie Swiss trade I called out a while back that ended up working to perfection. Yeah, just follow me over there. If you're not part of the Discord, if you're in the Discord, then you'll know, because yeah, for sure you'll know when I'm ready to short it again. Just follow me somewhere and you'll know when I'm ready. But there's no setup on it right yet. We got to wait for it to build in that resistance. So once we get that resistance built in, then we'll take another swing at it to the short side. All right. First place we're going to watch is 146, 104. That's just because it's daily resistance. We're not looking for it to, and beautiful. It didn't liquidate last week's low either. So this candle did liquidate several swing lows. When it dropped, boom, and it closed under them. That's a good weak close. So we could see this thing trading back down to there, at least. What we definitely don't want to see it do is we do not want to see it close a weekly candle above 147.096. Now, it can throw a wick above the high of this candle, and that actually might would probably be the best short entry if that were to occur, but I don't think you're even going to get up there. Let's see where we are on the fib. Yeah, you're right in an area where you should find resistance pretty damn soon. Well, there's no point in looking at a month. We know that we've already liquidated all the lows down there. So the next one to liquidate is 142. Or go back up there and liquidate 149. These are the two targets for the monthly range. Because the downside targets here and here were hit. But you can see that you're trending down. Longer term, this thing is definitely still bullish. Still very, very bullish. So we're not looking for the short to be the end of the asset. We're just looking for a near-term technical short. But that one already played out. And then the Aussie CAD trade that I called out on Twitter a long time ago played out perfect. You can see this thing is up big now, right? Yeah. I can't remember where was it. Where was it? It didn't play out it did play out, but it didn't play out to perfection. This is where I was looking for the short right here. You can see how you liquidated the previous day's high, and then boom, down it went. And then I had a longer term target of this right there. So I wanted to get short here, take profits down here. Ultimately, it came back, took me out of the trade, then rolled over, and then hit my. So even though I know what I'm doing, I still get treated like that. The market still beats me up on occasion. I made money on the trade, but the longer term goal, what I wanted to see longer term, what I wanted to be a part of longer term did not work out for me. Ryan K took Tesla on the gap close 170 stop. Wick low. Let's look at it. Mr. Tesla. Yeah, I made a little bit of money on Tesla a couple weeks ago. Yeah, see, I would have wanted to see this thing hold up right there. But it came all the way back down to them lows. He bought 170, so he bought this. The gap village in the village. This is the gap he's speaking of. From this swing high to that swing low, that is your gap. Boom. Boom. You can see there's a clear, obvious gap in price. We waited for the gap fill, and then he got long. And you said stop is below the wick low. I like it. I like it. I like it. Your risk is mitigated. That is good stuff, man. Whether the trade works out or not, what you're doing is right. Good job. You just joined the community. That's cool. Thank you for doing that. I appreciate it. Look on the Patreon messages inside there if you haven't gotten your link yet to the Discord. You will find it there. I went on there yesterday and made sure every single new person, which there ain't many, there's just like 4 or 5, all of you have links. So unless you joined today, you should have a link. If the link don't work, just let me know and I will get you another one. Can you analyze Apple and Tesla? Yeah. We're glad to have you, Ryan. Cream pie. Can you analyze Apple and Tesla? Yeah. Tesla did what we did not want to see it do. This is because of the S&P 500 being a very bearish week. The S&P 500 is very bearish this week. It still is, even though you're seeing a decent little day today, a pullback. You took out last week's low. So, that's not that bullish. So we're going to have to wait to see how it closes tomorrow. I definitely, to keep the bullish case alive for this, it needs to close above 39.63. A close below will be a breakdown. Now, traps do exist, so it could be a bear trap, but we'll have to see. We'll have to wait and see how it plays out. But anyways, this is why this happened on Tesla. Tesla all the way back down to the lows. It didn't quite get to daily support. There's daily support. But it did do the gap fillage in the village, right? It did do that. And that sometimes is all it wants to do. Sometimes after a gap is filled, the market will reverse and go back. We'll see if it does or not. We shall see if it does or not. And then Apple. Let's put them up on the big monitor here. I don't know what that level is. Probably an old weekly level. Yeah, you did the same thing on Apple. That's a bearish engulfing on Apple. Or an outside weekly candle, also known as a bearish engulf. You took out the low and the high of the previous candle. So it doesn't look good. I never really want to see a bearish engulfing candle on an asset that's in a downtrend. But like I said, we'll see if we got some kind of a trap going on. As long as you're not closing weeklies below 138.70, 138.20, sorry, 138.20. There. 138.20. As long as you're not closing weeklies under that, I think you're safe. I think it goes up. Apple has held its value extremely well in this bear market, considering what a lot of other things did. Yeah, you just went to 20% down. Like Tesla's off almost 50%, 40 something percent. Netflix got down to like 78%. Netflix was probably the best one to buy. Facebook, Meta, we don't know what it's doing or what it's gonna do. But Apple is it's usually a good stock. They make money. We know they make money. They have great investments. So they're going to make money. As long as they're making money, their stock price should go higher once the bear market ends. And the bear market will end. They always do. They always end. This asset only goes from left to right up. Right? That's what you want to see in an investment tool. In an asset that you want to invest in for a long-term growth, is you want to make sure that it has indeed seen long-term growth. If your asset does exactly the opposite, starts in the left and goes to the right but down, that's not an asset you want to invest in. Apple is a good one. Watch 138.20. If it gets down there, that could potentially be an opportunity to buy it. I don't like that the bounces are getting lower. Each time you've found support, you've gotten an aggressive rally, right? Came in and then you bounced lower. But to be fair, you didn't make a lower low. So I mean, you're wedging up. But it does look like it wants to break down. However, if the markets become bullish again, it's going to break out, up, not down. All right. You got some kind of little wedge thing going on here. If it breaks down first, I would be hesitant to say that it's breaking down. That would, to me, would look a little bit more like a bear trap. But the very next week needs to be like exactly the opposite in order for that to be a bear trap. If you see downside continuation and it is not a trap, it is continuation. All right, and then Barry deleted his comments. So let's go over here and check out some of these for Brian real quick, and we'll wrap it up. TLT bond. Yeah, I think you should be looking for longs on this. I think if the bear market's going to be over, then this is going to be one where you can get some growth. There is no level for me to give you to buy. It doesn't have any. Like literally any of these weekly opens or closes could be support in the future. All right, so you got a couple daily supports here. There's one. There's one. Now just watch all of these on a pullback. I don't know which one it's going to stop at or if it even will stop at them. It could do what Tesla did and come all the way back down to the lows. So just watch those, your daily closes, because you don't have anything on the weekly. You are getting upside continuation. So what I would probably wait on is I would wait for 110.56 to get taken out. Once it gets taken out, look for that pullback. Maybe 103.47. As that's this month's open. Maybe that holds as support moving forward. XLY. I mean, my answer is pretty much going to be the same on all of these. Yeah, it goes up. The economy's held up pretty good considering, so I like 137.48. I like it. You've already liquidated the low, so I wouldn't want to see it get under this low. If you do, then you're going lower. If you get under 131.90, then I would have a downside target of 127.79. So you can't, if you get under this, you can't do anything until you get down under this. Once you get down under this, upon resumption, I would take a long entry. But if it cannot close under monthly support, then that's where I would look for the long. XLK. Tech. Yeah, tech's going to grow again eventually. XLK seems to be holding support at last month's open. Let's see if it does. Same thing. A monthly close under this, then I wouldn't do anything until it gets to there. Right? Wouldn't do anything till it gets to there. IYT. I know a lot of people are looking for bonds to bounce back. Some of them. I wouldn't look for all of them too, but some of them. Same thing here. I would just watch last month's open, see if you can get a test of that. There isn't any like really near-term levels that I see here. I mean, you do got weekly support here, but you're trying to buy it up on the highs. I would like a deeper correction. 215.14 on that one. MPW. Yeah, this one doesn't look as good. This thing got beat up. Just a rough estimate. All the way down to 60%. I wouldn't want to see price get back under that 1203. If it does get under 1203 and close under 1203, then wait to 1098. Monthly support on this one is 1878. Same thing though. If 1940 fails, it's going to 1878. EWI. UWI. Yeah, I don't know why you want to buy Korean stocks, but watch last week's open. Yeah, last week's open, you've already tested it. I would say you'll probably liquidate last week's low. You haven't done it yet, so I guess it just ultimately depends on what the SPY does later on. Yeah, ultimately it'll just be your decision on where to buy it, if you buy it or not. Let's do one more. Let's just do Bill. Let's just finish it up. This is disgusting. This probably ain't. Oh yeah, it is, but that can't be right. This thing doesn't trade. It used to didn't do anything, and now it's trading like a shit coin. I mean, you still have potential downside here. I don't know. I wouldn't touch this. It's literally like 10 cents. This thing barely moves. I wouldn't even mess with it. All right. I guess we'll wrap it up there. Been on for almost 2 hours. The trades that we were looking at worked. Bitcoin's up above the high of day. See, if you would have gotten short at the high of day here, you would have been stopped out again. That's why I said I would probably rather buy it than sell it. Because ultimately my longer term bias is up. S&P 500 currently trading above weekly resistance, which is good. Very, very good. The closer it gets to $400, the better I will feel. Hopefully it does it by tomorrow. Get up to 402, and then I'll be able to close out that position for a small gain. And if it does that, then that means the VIX puts that I bought today at the $23 strike will be in the money by a few strikes. And when the VIX gets in the money, it goes up pretty good. Right here, you can see I'm one strike in the money right now, but I paid like 131 for them, so I'm up maybe 50 cents on the trade right now. But the more it goes in the money, the more expensive it gets. You can see, like on the VIX, if you just get a couple dollar move, these options, man, they go up. Like, since I paid less than $1.50 for them, right? Anything over $3 is double. So the position will essentially double the amount of profits earned by it. And anything beyond that is just nice. If you can buy something for $1 and then sell them for $6, $7, that's a phenomenally profitable trade. Phenomenally profitable. That's why I love trading with options, because if you are right, them things are, it's like leveraging up anything. And there's a lot of people that trade the VIX. I mean, just look at the sheer volume on this open interest. 83,000 contracts there. We got 94,000 contracts on the $26 calls. Most of these people are selling calls for the premium. $405,000. The $30 strike. That doesn't mean someone bought the $30 strike because they think it's going to $30. They could have been selling the $30 strike because they think it's not going to get there. And then they just collect the premium, right? This stuff right there. They'll sell them, and then they'll get the 34 cents on each contract they own or that they sell. And then they can use that money to then fund a put or a sell, a put or a call without paying money. That's when options are fun, when you can learn how to get into positions with like zero risk to the portfolio. It's fantastic. And occasionally you can. All right, you guys have a fantastic day. We will see you again on Tuesday, and then after that we will do the CPI newsprint. We'll be looking to trade that. We'll also be looking to trade FOMC Now, CPI will be at 8:30 a.m. Eastern Standard Time, so we'll go live about 8. We'll start at 8. I don't know if we'll go all the way into the market open or not, but we may. We'll see how whatever happens that day. And then the FOMC's the next day. That will be at 2 o'clock. We get the minutes out at 2, and then we get the speech at 2:30. So, yeah, we'll be live then as well. You guys have a fantastic rest of your day. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.